Welcome to Han Invest TV, where we explore the hidden psychological barriers that keep wealthy people from truly enjoying their lives. Imagine spending 40 years working tirelessly, saving every penny, only to find yourself unable to spend a single dime in retirement. This is the paradox of oversaving. We sacrifice our youth to build a nest egg, but eventually we become prisoners of it. Today, we are going to dismantle the fear of spending and understand why having too much money can actually be a burden. Many retirees suffer from a condition where the virtues that made them rich now prevent them from living a fulfilling life. We call this the saver's trap. It is a psychological state where the act of spending feels physically painful and wrong. You might see millionaires living like paupers, denying themselves simple pleasures because they are terrified of running out of money someday. Is the purpose of life to be the richest person in the graveyard, or to create memories that last a lifetime? To solve this, we must first understand the psychology behind it. Your brain has been wired to save for survival purposes. Let us dive deep into the psychological trap. Why does spending money feel like you are losing a part of yourself? The traits that build wealth are discipline, patience, and delayed gratification. You have spent decades saying no to your immediate desires. When you retire, you are asked to suddenly flip a switch. You must stop saving and start spending, which feels impossible. Many people view their net worth as a scorecard. If the number goes down, they feel like they are losing the game. This scorecard mentality is dangerous. It detaches money from its true purpose, which is to be exchanged for goods and services. When you spend from your principal, it feels like a permanent loss. You feel you are destroying what you built. Wealth provides security. Spending that wealth feels like removing bricks from the wall that protects you from the unknown future. Fear is a powerful motivator. We worry about inflation, market crashes, or living longer than our money can possibly last. But this fear is often irrational. It keeps you locked in a cycle of accumulation long after you have won the game. You have reached the summit, yet you keep climbing. You need to learn how to plant your flag and enjoy the view. The cost of this psychological trap is missed connections. You trade precious time with loved ones for numbers on a screen. We delay gratification until the gratification is no longer possible. The car you wanted at 50 is useless at 90. Now, let us address the technical side. The famous 4% rule is often the biggest culprit in this oversaving tragedy. The rule suggests you can withdraw 4% of your portfolio annually. However, most people misunderstand this as a strict maximum limit. Research shows that this rule is designed for the worst-case scenario. It assumes a terrible market crash right after you retire. In reality, following this rule strictly means you are preparing for a financial apocalypse that likely will never actually happen. Studies prove that most people who follow the 4% rule will die with more money than they had when they retired. This is a massive inefficiency. You worked for money that you never used, essentially working for free for several years. Why don't financial advisors tell you this? Because the financial industry has a direct conflict of interest with your spending. Most advisors are paid based on assets under management. The more money you keep in your account, the more they earn. If they advise you to withdraw money to travel or buy a vacation home, they are actively reducing their own annual income. Therefore, the industry is incentivized to keep you fearful. They want you to hoard your wealth so they can manage it. You need to realize when advice is objective and when it is designed to protect the advisor's revenue stream, not yours. It is time to take back control. You must separate prudent planning from the profit motives of the institutions managing your funds. This brings us to a revolutionary concept: die with zero. This philosophy challenges the traditional view of leaving a massive inheritance. The core argument is that money has diminishing returns. $1 million at age 30 is worth far more than at 80. You can buy the ski trip at age 80, but you cannot buy the physical ability to actually ski down the mountain. We must optimize for life fulfillment, not just net worth. Every experience has an expiration date based on your health and energy. Waiting to leave money as an inheritance often means your children receive it when they are already old and financially stable. The smart approach is to give while you are alive. Help your children when the money can truly impact their quality of life. Money is like water. It is most useful when it helps things grow, not when it floods a garden that is already flourishing. Die with zero does not mean running out of money too soon. It means calibrating your spending to maximize joy before the end. But what about the fear of medical bills? This is the number one reason people hoard cash well into their final years. It is a valid concern. Long-term care can be incredibly expensive and can wipe out a lifetime of savings in a few years. However, trying to self-insure by hoarding millions is inefficient. You are locking away huge sums for a worst-case scenario. The solution is insurance. Buy long-term care insurance to cap your downside risk. Pay a premium to transfer that fear to a company. Once your medical risks are covered by insurance, the rest of your money is free. You can spend it without guilt or worry. This is true financial freedom. It is not just about having money, but having the peace of mind to actually use it. Stop playing the probability game with your life savings. Insure the catastrophic risks so you can enjoy the certainties of today. Time is the only non-renewable resource. You can always make more money, but you cannot make more time once it is gone. Invest in memories. Invest in your family. Invest in experiences that will bring you comfort when you are too old to move. Do not wait for the perfect moment. The perfect moment is now, while you have the health and the wealth to seize it. Stop checking the score. You have already won the game. It is time to walk off the field and celebrate your victory. Use your wealth to bring people together. The joy of sharing your success is far greater than the comfort of hoarding it. You worked hard for your freedom. Do not let fear turn your freedom back into a different kind of servitude. Remember the 3 pillars. Overcome the psychological trap, ignore the industry's conflict of interest, and optimize your life for fulfillment. Your legacy is not the number in your bank account. It is the impact you had on the people around you. Let your wealth be the fuel for a life that burns bright, rather than a pile of wood that never gets ignited. Thank you for joining us on this journey to rethink retirement. We hope this empowers you to make different choices today. If you found value in this video, please like and subscribe to Han Invest TV for more insights on wealth and psychology. Live your best life, spend with purpose, and never let your money own you. See you in the next video. Goodbye. Let's revisit the portfolio strategy. Instead of purely growth stocks, consider shifting towards income-generating assets that encourage spending naturally. When you live off dividends or interest, you feel less guilt because the principal remains touched. It is a mental hack. Psychologically, spending income feels safer than selling shares. Use this bias to your advantage to unlock your spending potential. Create a mandatory fund. This is money that must be spent by the end of the year or donated. If you truly cannot spend it on yourself, experience the joy of philanthropy. See the impact of your wealth while alive. Simplifying your estate now saves your heirs from headaches later. It is the final act of kindness you can perform. Your financial journey has been a long road. Do not stop driving just because you reached the destination. Explore the surroundings. Accelerate your experiences. As you age, time speeds up. You must be intentional to slow it down with new memories. Invest heavily in your health. The best return on investment for a retiree is a personal trainer and good nutrition. Money in the bank cannot buy back mobility. Spending on your body now prevents spending on hospitals later on. Learn to say no to making more money. It is a radical act. Enough is a powerful word that brings peace. Define what enough means to you. Once you reach it, stop the accumulation phase and switch entirely to the distribution phase. Your bucket list should not be a list of regrets. It should be a to-do list that you are actively working on. Go see the Northern Lights. Take the cruise. Buy the expensive wine. You have earned the right to these moments. Break free from the mindset of scarcity. The universe is abundant, and you have secured your slice of that abundance. Your stories are the true inheritance. But you cannot tell stories about bank accounts. You tell stories about adventures and risks. Fill your album. When you look back, you want to see a life that was used up, not a life preserved. Life is a candle. You can keep it in a box unlit, or you can burn it to light up the room. Make peace with the fact that you cannot take it with you. The shroud has no pockets. Spend it while here. Think of your wealth as fertilizer. It does no good sitting in a pile. It must be spread to create beauty. Rest is also a valid use of time and money. Buying freedom from chores and stress is the ultimate luxury purchase. Use money to buy time. Hire cleaners, gardeners, and assistants. Eliminate the tasks that drain your energy and focus on joy. Learn something new. It keeps the brain young. Use your resources to fund your curiosity and expand your horizons daily. Reconnect with old passions. The hobbies you sacrificed for your career are waiting for you to pick them up again. Conquer your fear. The monster under the bed is just a shadow. The fear of poverty is often just a shadow. Step out of the shadow and into the light. You have built the foundation. Now it is time to build the house. Join the ranks of those who mastered their money. Be the master, not the servant. This is your final financial lesson. Let your life create ripples. Your spending supports businesses, artists, and families. Your joy spreads to everyone around you. This has been a presentation by Han Invest TV. We are dedicated to helping you navigate the complex world of finance. Thank you for watching. Remember to subscribe and hit the bell icon. Start living your wealthy life.